Hope you guys are good. Welcome back to my channel. So gents, as you guys already know, my name is Tumelo. So in this video gents, we're gonna be focusing on market structure. I took some time to understand why a lot of traders are struggling, and then I came to an understanding that most traders do not understand market structure, right? So in this video I'm gonna be breaking it down for you guys. So this is gonna be a very valuable video. We're gonna do two parts. So this is the first part, and then later on I'm gonna be doing the second part, and then the second part is gonna be a little bit advanced. So I hope you guys will be in the loop for the second one. If you are not yet subscribed to the channel, consider subscribing. Don't forget to like the video, share, comment, do all that great stuff gents for the YouTube algorithm. So gents, without wasting any time, let's get straight to the video. So gents, those are some of the questions that you guys might have, or some of the questions that I've been receiving, right? So the first question, what is market structure? Market structure is the behavior, condition, and the current flow of the market. It highlights the swing high and the swing lows. A trend is simply a consistent direction of price movement over time. Market structure can tell you if the market is trending or not, meaning market structure can tell you if the market is pushing either to the upside or to the downside, or the market is ranging, does not really have the movement at the current stage, right? Question number two, in which strategy can one use market structure to their advantage, right? Okay, this is one of the most important questions. I'm gonna go ahead and answer it like this, right? So it doesn't matter, gents, which strategy you're using, right? Whether you're using smart money concept, whether you're using patterns, whether you're using trend lines, whether you're using Fibonacci, whether you're using Gartleys, or whatever strategy that you might be using, it doesn't matter, right? It is very important to understand market structure, whether you're using either one of those strategies, because it will help you to identify whether the market is either pushing to the upside or to the downside. It will help you to understand whether you are looking for buying opportunities or whether you are looking for selling opportunities, or maybe let's say the market is ranging at that moment. It will help you to understand that that is not the right time for you to be trading, right? So the last question, which is question number three, types of market structures and how to use them to your advantage in the market. So in this question, I will move on to the next slide to explain this question a little bit better. So as you guys can see from your screen, we're looking at what actually market structure is, right? So now let me quickly explain what's happening here. As you guys can see from the picture, we have HH. HH means higher high. For those who do not know, HL means higher low. And then we find those two in an uptrend, right? In an uptrending market. And then we have LL. LL means lower low, and then LH means lower high, right? And then we find those two in a downtrend, which is a bearish market. So obviously an uptrend, we call it a bullish market, and then we also have a ranging market. So what it means when we talk about a bullish market, which is an uptrend or a bullish trend, right? We can say that the market is pushing to the upside. As you guys already know, or as you guys already noticed, that the market does not shoot straight up. It pushes up with on a zigzag kind of movement, doesn't push up straight up just like that, right? It pushes up, pushes back, pushes up, pushes back, but then obviously it breaking the previous highs. So you can see the market is pushing to the upside. On a bullish market, obviously you can see that the market is pushing up, but then pushes down again, pushes up, breaks the previous high, just like so, right? That way we can say the market is on an uptrend, right? So now just want to explain, as you guys can see from picture one, right? We have three pictures. We have picture one, which is an uptrend, picture two, a ranging market, And then picture 3, we have a downtrend, right? So we're gonna try to explain each and how to sort of take advantage, obviously. So it doesn't matter what strategy you guys are using, market structure is very, very important. If you get to understand market structure, it will be a game changer in your trading. You will know when to enter, when to exit, why do you enter, why not enter. Like, you will understand the market, right? If you understand market structures, the basics, right? As you guys already know, there are traders who are successful. Successful traders do understand market structure. If you want to be successful, you need to understand market structure, because you will know exactly when to buy or when to sell, when to exit, when to hold your trades, when to do whatever that you need to do, right, for you to be successful. So on an uptrend, as you guys can see, as I've explained, price is pushing to the upside, creating a new higher high, as you guys can see, pushes back to the downside, creating a higher low, right? So as you guys can notice that the market keep breaking highs. Like I said, we keep breaking highs. It shows that the market is in an uptrend. We break highs, but then we don't break lows. As you guys can see, the previous low is still there, and then we create a new previous lower high. I mean new lower high, and then price pushes up, takes out the high, as you guys can see. Let me just try to show you guys. We break the high. So this is what we call break of structure, but then we're going to talk about that in our next video. The next video will be more important, right? So stay tuned for that. So as you guys can see, we created a new higher high, and then we push to the downside. We created a new lower high above the previous one. We like the lower low, the lower high, I mean, the higher low, sorry about that, the higher low, it's not below this, the previous one, it's above the previous high. So it shows that we are in an uptrend, right? But then should the market, maybe let's say the market pushes to the downside like so, from here, pushes to the downside, takes out the previous low, which is this one here, and then we will consider this as change of character. Obviously, we're going to be looking for order blocks somewhere around those areas, assuming that the market is changing in character to the downside, right? So we're going to talk about that in the next video. So this one, we're just going to focus on this one, just the basics, right? So the next video will be more of an advanced market structure, right? So now, and then we're gonna do other blocks because they are fairly important for those who are trading smart money concept. We're gonna do other blocks as well, right? So as you guys can see, we've been breaking highs, we've been breaking higher highs, right? So now the market is in a clear uptrend. So that's how we understand what an uptrend is. So this will help you. How will this help you, if I can ask that question and answer myself, right? So this will help you to understand that the market is in an uptrend. You are looking for buying opportunities, right? You are looking for buying opportunities. Obviously, there are opportunities where you can sell, right? But then obviously, you know, you're not gonna sell for long. You're gonna counter trend. That's what we call counter trending. You're not gonna be selling for long, right? Because we are in a bullish market. We're looking for more buying opportunities than selling opportunities, right? So let's say, how do you sell in this market? Someone can ask me that question, right? So let's say we know that the market pushed, took out the high. We're still in an uptrend. But then this question, to answer this question, we have to go to other blocks. But then I'll go to other blocks later on. But then as you guys can see, price, we know that price moves in zigzag, right? It leaves other blocks. There are things that we use to understand that the market has to come back. We have other blocks, we have fair value gap, what we call imbalance, we have liquidity. Those are the things that helps us to understand that, you know what, the market has to push back to the downside to mitigate smart money order blocks and start pushing to the upside, right? for those who are familiar with that. But then if you are not, don't stress yourself, don't confuse yourself. I will do a video on that, explaining better, right? So now we'll continue. I hope you guys understand what's an uptrend. If you have any questions, feel free to comment your question down below. I'll make time to get back to your questions, right? So now I'm done with an uptrend. We're gonna go ahead and talk about a ranging market, right? What is a ranging market? A ranging market is the market that does not have a clear movement, or the market that is not really moving, right? It moves sideways, right? Creating series of equal highs and equal lows, right? As you guys can see from this picture, we have equal highs and equal lows. So as you guys can see, this high is equal to this high, is high is equal to this high is equal to this high, right? The lows are equal as well, right? So this is a ranging market. Within our strategy, we are not looking to trade such markets, right? And I'm sure in a lot of strategies, they are not also looking to trade such markets, because remember, we have what we call liquidity. I don't want to confuse you guys. I will do the videos on liquidity as well, so that you guys can be in a position that we are in, right? So obviously, creating equal highs, equal highs, equal highs. That's what we call a range market. Within our strategy, we are not looking to trade those, and then some other strategies as well. Why? What's the reason for that? Why we? Because the market doesn't have a clear direction. That's the good reason for that, right? And then the other reason, the more how can I say, the more advanced reason, right? Why we don't trade that? We don't want to become liquidity, right? We don't want to become liquidity. What I mean by liquidity is that as the market bounces there, as the market bounces there, as the market bounces there, this whole thing is created by what? By smart money, right? By the big bands, right? So no, they know that obviously if price bounces here and here, people here, they will consider this as a strong resistant area. Like for those who trading support and resistant, right? They will know that okay, this is a very strong resistant, and then they will be looking to sell from here and then push with price to the downside. They will be looking to buy from there, push to the downside, sell from there, push to the downside. So we don't want to become liquidity, right? So because eventually liquidity is gonna be taken out, right? So let's say the market has been ranging, you sold here, pushes to the downside, it's fine. You buy here, pushes to the upside, you even increase the lot size, right? You even increase the lot size to say, you know what, this is pushing, and then obviously your stop losses will be above here, right? And then maybe let's say the market pushes back up here, and then you sell there, the market takes you out. Like you become liquidity. The market takes you out and start pushing to the downside, takes out the liquidity that is down here and start moving to either direction, right? So we don't want to become liquidity. That's why we wait for the market to give us a very clean market structure, a very clean trending market structure. It's either it's trending to the upside or trending to the downside. That's what we want to see, right? So now let's talk about a downtrend, right? A downtrend is a complete opposite of an uptrend. Obviously, on an uptrend, we know that the market is pushing to the upside. Obviously, on a downtrend, the market does the opposite. It pushes to the downside, creating series of lower lows and lower highs. We know that if the market creates lower lows and lower highs, we know that that market is a downtrend. It's a bearish market structure, right? And then we're looking for selling opportunities. We're looking for selling opportunities, guys, when the market does that, right? So as you guys can see, this one it's a total opposite, because the lower lows are the ones that are taken out, right? The lower lows are the ones that are taken out. To understand, to say that the market is in a downtrend, the market has to take out the previous lower low. As you guys can see, let me just quickly grab this so that I'll explain better, right? So as you guys can see, this low This low is being taken out, right? This low is being taken out. Price pushed back to the upside. This lower high, the new formed lower high, does not take out the previous lower high, right? Does not. It creates a new lower high, which is here. It does not take the previous lower high, as you guys can see that. Pushes to the downside, and then obviously takes out the previous low that was printed in the market, pushes back up, does not take out the previous lower high, doesn't take out the previous lower high. That way we still know that, okay, we are still in a downtrend. We are still looking for those selling opportunities. Obviously, there are ways. I will teach you guys those ways on our next YouTube video. Stay tuned for that. I will teach you liquidity. I will teach you order blocks so that you guys can be in the same level, so that you can be able to trade on your own as well, right? So as you guys can see, this is a downtrend. We're taking out lows. On an uptrend, we're taking out highs. So that's the difference. That's what you need to know as a trader. First thing first, when you open your chart, you need to understand that now the market is in an uptrend, or the market is in a downtrend, or the market is ranging. Once you understand that, you will have an edge, obviously, in the market, because you know, okay, if the market is pushing so to the upside or to the downside, I will be looking to sell or to buy, right? So now let's look at example on the Excel chart, and then after that we're gonna wrap up, and then I'm gonna do a next video that is more advanced, that is gonna teach you guys the basics of how to enter, how to exit, how to identify change of character, how to sort of identify the areas that you're gonna be looking to buy from. So yeah, the next video is very important. So I'll stay in the loop, ring that notification bell. Don't forget to ring that notification bell. If you are not yet subscribed, consider subscribing. And then yeah, just let me just show you the examples on the Excel chart. So yeah, gents, as you guys can see, I'm looking from USD's chart. As you guys can see, this is an example of an uptrend, right? As you guys can see, if you focus in this piece of price action here, you will notice that price is pushing to the upside, because it is producing series of higher highs and higher lows, right? So this is a very clear example of a uptrend. Why? Because we are pushing to the upside. As you guys can see, the market is pushing to the upside, right? So this is a very clear example of an uptrend. We keep breaking highs, right? So let me just quickly go ahead and identify the higher highs. Just gonna go ahead and do that. This is gonna be a higher high, right? And then just want you guys to notice how we taking out highs, right? So we're just gonna start from here. This was the high that the market printed, and then what happened? The market created this low, right? So let me just go ahead and do the higher highs first, and then we will also do the higher lows, right? So that you guys can understand. Let me just grab that and then put it there, right? As you guys can see, grab the next one, put it. This is the. So notice how the highs are above. Like, look at the first high is this one here, as you guys can see. The next one is higher than the first one. So it shows that the market is in an uptrend. The market is pushing to the upside. We need to understand this. Why? Because we don't want to be caught in the wrong side of the market, right? So obviously, once we understand that, okay, when the market produces series of higher highs, we know that, okay, this market is in an uptrend, right? So you guys can see, then the last high that we have is this one up here, right? And then after that, the market change character, but then we will do that in our next video. The change of characters, we'll do that in our next video. So I just want to show you guys the lows quickly, show you guys the lows as well. So those are lower highs, right? Lower, those are higher low, higher low, right? So I don't know how many we have, but then we're just gonna go 1, 2, 3, maybe 4, 5, something like so. Then the first one is here. The first one is here. I want you guys to notice how the lower lows are below. Let's say the market creates a new lower low. Does not The new lower low does not does not go below the previous lower high, right? It goes above, as you guys can see. So it shows that we are still in an uptrend. The market still respects our setups, our trend, I mean to say. So as you guys can see, I want you guys to notice how the market is pushing to the upside. This is a bullish market. We keep taking out highs, right? So the market broke this high. So this will be break of structure. We'll talk about that as well in the next video. For those who do not understand, I'll just mark it as B, and then maybe copy 1, 2, 3, 4, 5, something like so. So as you guys can see, notice how we keep taking out highs, right? Notice how we keep taking out highs. So it shows that this is a bullish market. Once you understand this will be a game changer for you guys. Once you understand how to use this, obviously you will know when to buy and when not to buy, right? Obviously, you understanding market structure, there are some of the things that you also need to understand, which are order blocks, liquidity. Those are the things that you need. But then after understanding that, you will know that now you are set, right? You are set for a successful trading career. So notice how we take out highs as we push to the upside. So this is an actual example of an uptrend. We broke the high again. We broke the high. So it shows that the market is pushing to the upside. Notice how the lows are above. The higher lows are above, right? So this one was the first one. The next one is above this one, as you guys can see. And then look at, this is the other one that was created, right? Notice how the new one is above the old one, right? Notice how the new one is above the old one. Notice how the new one is above the old one. So this is how we understand that the market is in an uptrend, right? So obviously, understanding that we're having order blocks, we're having areas that we look to take trades from. Obviously, we'll go deep into that on our next video. I hope you will be in the loop for that one, because it's gonna be very powerful, as this one. So for now, for those who did not understand market structure, now you do, right? So let's look for a downtrend, and then if possibly, if we can find a ranging market, we will go ahead and do the ranging market as well, gents. So yeah, gents, we find an example of a downtrend from Euro USD daily time frame. As you guys can see, usually we start analyzing from a daily time frame so that we can understand the overall movement of the market, right? So that's why we start looking on a daily time frame, right? So as you guys can see, price has been creating lower lows, lower lows, lower lows, lower lows, lower lows, right? So it means now the market is in a downtrend. We have identified our lows, and then we have identified the overall movement of the market, which is the downtrend, right? So now notice how the market keeps taking out the lows, right? Keeps taking out the lows, right? This low was taken out, right? This low was taken out, broke structure, and copy and paste. This low was taken out as well. This low was taken out as well. So we can understand that now the market is in a downtrend. And then there's more to market structure, gents. There's more to market structure that we will be talking about as well, so that you guys can understand deeply, right? We're gonna be doing a lot on our next video. This is just part one, right? This is just part one. We will most probably have part three as well. So notice how we keep taking out lows. It shows that the market is in a downtrend. The market is bearish. the market is pushing to the downside. So obviously in this kind of market, we're looking for long-term selling opportunities. Obviously there will be buying opportunities, but those buying opportunities are short term, right? Imagine prices pushing to the downside. Let's say you get a buying opportunity here, you will see that price pushes to the upside, but not as much as it pushes to the downside, right? Imagine having to enter here and then hold your hold it all the way to the downside. You will see that the term that you hold in this is longer than this term, right? So this is why I'm saying in a bearish market or in a downtrend, we're looking for long-term selling opportunities, right? But I'm not saying we cannot buy. Yes, we can, but then our mindset should be selling, right? Our mindset should be looking for selling opportunities more than for buying opportunities, unless the market changes in character, right? If the market changes in character, there are things that we need to see as well for us to say now we're looking for buying opportunities, right? Because the market changed in character, right? So now, as you guys can see, look at the lows, the lower highs, right? The lower highs are above. This one is this one was created first, and then the second one is below, right? As you guys can see, this one was created after that one, right? And then price push to the downside. This one was created after this one, and then it is below, right? So it shows that the market is in a downtrend. If price should change in character, like you see here, right? Look at that high, right? This is not we went above the previous low, which is this one here. We consider that as change of character, and then you will see after that the market pushed all the way to the upside, right? The market pushed all the way to the upside. So those areas are the areas that we're looking for our opportunities, because we know that now the market changing character. So we will do that in the next video, like I said. So I hope you guys understand market structure, but then there is more into market structure. I will be doing the second video, and then I hope you guys took a lot from this one. And then so this is basically what it means when we say market structure, right? Remember, just a very quick recap, we have a bullish market. On a bullish market, obviously we're looking to buy, we're looking for the market is pushing to the upside. It produces series of higher highs and higher lows, and then it keeps on breaking highs, but then it does not break lows, right? It breaks high, does not break lows on a bullish market. On a bearish market, it breaks lows, it doesn't break highs, right? It breaks lows, it doesn't break highs. As you guys can see from the picture, you will see that the market is pushing to the downside because it's taking out lows. So that's, you need to understand that. Once you do, I promise you guys it will be a game changer. Stay tuned for the next video.
Thank you guys so much for watching. I really hope you guys took a lot of value out of this video. So I can stay tuned for the next video. It's gonna be very valuable, part 2, and then later on we're gonna be doing other blogs, because I understand a lot of you are still struggling with other blogs. And then we're gonna also do patterns. So yeah, man, I consider subscribing to the channel and ring that notification bell so that you'll be in the loop every time we drop a video, gents. Thank you guys so much for watching. See you in the next one. Always, gents.